Hello everyone and welcome to another Unqualified Professional gives you the real estate news. Today we're going to talk about the alarming trend of smaller lending companies, specifically non-QM funding companies that are going bankrupt. And there's one particular case I'm going to talk about today that's a little more on the alarming side. The company we're going to talk about today that's a little more concerning is Sprout Mortgage. Sprout Mortgage about 2 days ago got released that they are shutting down their operations, and they're their second non-QM mortgage lender to close in the recent weeks among the historic volatility, according to HousingWire.com. First Guarantee Mortgage Company was the first one to go down abruptly. And you know, when I say abruptly, I mean abruptly. I'm talking about people getting notified with a phone call, and then they try to log into their systems and just literally being locked out of everything. Not only that, but being promised that they're going to continue to get benefits and paychecks, only for that not to follow through on it. And actually, as of a few hours ago, there's a bunch of ex-workers suing Sprout Mortgage over unpaid salaries. On top of that, who knows what's going to happen with all the loans that are currently in process with these lenders, because according to this article as well, former employees of Sprout said loans and pipelines are still pending and it's highly doubtful they will be funded. At least one employee has their own personal mortgage in the Sprout pipeline and has not received an update on the loan status. What does this mean? Well, first and foremost, let's go over the difference between a QM lender and a non-QM lender. First and foremost, QM means qualified mortgage. So one is a qualified mortgage and one is a non-qualified mortgage. When we're talking about QM or qualified mortgages, we're talking about things that have run through the ringer. Essentially, these stricter guidelines were put in place by the government, by the powers that be, to make sure that homeowners like yourself are protected and reduce the likelihood of them being foreclosed on, defaulting on home loans, and causing another calamity as it was a few years ago. Risky mortgages like balloon payments, interest-only payments are no longer allowed. In addition to that, upfront points are limited. Essentially, every time I've talked about qualifying for loans like conventional FHA and the strict guidelines, the DTI, credit scores, all that is in reference to QM loans, qualified mortgages. And quite frankly, this is the route you should always strive for. So basically anything not having to do with the QM loans are considered non-QM. Why would anyone in their right mind do that? Well, quite frankly, it depends how you receive your income. Yes, if you're on a very standard W-2, you get paid every 2 weeks, it's a salary and everything's written on paper, you should never consider it a non-QM loan. QM loan is where you should go. However, there are those folks that make incomes in different ways that are, you know, lump sums, or maybe they're self-employed, actors, actresses, all kinds of stuff that make a lot more money, but they don't do it in a traditional way. Therefore, the non-QM loans step in. So with a non-QM loan, you might get situations like people that don't have, you know, tax returns or pay stubs, stuff like that. Essentially, from my understanding and my research, they're using an ATR terms, essentially the ability to repay. So they're looking at historically how much money they've made, how consistently they've made it, and they're basing off what they qualify for off of that, not necessarily off the pay stubs that they can provide. Basically, anything that prevented you from qualifying for a loan the traditional way, you had a backdoor entrance with a non-QM loan. So the biggest difference between a QM and a non-QM loan is quite simple. Non-QM loans are not backed or insured by those popular terms you hear: conventional, VA, Fannie Mae, Freddie Mac, FHA, all those things. They're not backed by those entities which give a loan really the ability to sell it a lot easier, right? Let's say you're like an investor trying to buy like thousands of mortgages, right? So you will probably be more comfortable buying those mortgages if they're backed by some kind of government entity. All right, so now that we understand how it works, let's understand how these mortgage bankers, mortgage lenders work. So let's say I have a Javier Vidana loan company. Let's say I made it something more sexier, like Matcha Green Tea Incorporated. So let's say Matcha Green Tea Incorporated is doing these, well, let's just imagine any loans, right? So you come to me and, you know, I do a good job marketing myself. I'm connected with the best realtors, so they refer me and I just produce a bunch of loans, okay? So I'm working with the lenders, like hopefully QM loans, and I'm getting them qualified and I'm getting the loan packages ready, done, secured, funded, everything. Once that loan is secured, then I sell that to a servicing company. That's why you hear a lot of times from buyers where when they buy a house, they'll be surprised a few months later, they get a letter in the mail saying, hey, you're no longer supposed to pay your mortgage payments to us. You're now supposed to pay it to ABC Financial or ABC Lending. You're just like, what the heck? You're being passed around. It's not cool, right? Well, that's the thing. A lot of these mortgage companies make their money by originating the loans, not by servicing them for 30 years. What happens when you're dealing with loans that are not backed federally by the government, by these entities, FHA, VA, Convention, Freddie Mac, Fannie Mae, all those others? Well, you're dealing in the wild, wild west. It can be hugely profitable, but it can also be hugely pain in the assable, right? Because if you realize over the last month, interest rates have just been crazier than me without my matcha green tea. And that's not something you want to see. Let's just say that. Just a reminder for interest rate news, and this is not sponsored. The best place to get your news is Mortgage News Daily. Once again, I say again, not sponsored. You're going to get really good data for interest rates. You're going to get really good data for mortgage rates, news, all stuff. Stop getting your news from YouTube like this video. Get your news from reputable sources. So here with the interest rates, we can start seeing interest rates are starting to drop, but you can see here the huge spike bonanza that just happened over the last few months. So imagine yourself being a non-QM lender, securing thousands of loans, and you know, you're telling the buyer, hey, we're locking you in at this rate, and it gets closed at this rate. Well, by the time you're ready to sell it, rates went up by half a point, by a quarter point. Now, a lot of these lenders have the extra capital to eat up some of those losses when they get sold to different lenders. Well, what happens if they don't have that capital? According to this article where the ex-workers sue Sprout Mortgage over unpaid salaries, one former employee said, Sprout had been dealing with liquidity and funding problems for months. Unlike some of its peers, Sprout wasn't backed by a major asset management firm and is particularly vulnerable to lack of liquidity from investors. It couldn't handle the widening spreads and began taking losses on loans originating in the beginning of the year, he said. Crappy situation for the employees involved, and my heart goes out. These people were depending on this company to pay their salaries for the next month or two, and it's just heartbreaking that they now have to deal with this. But on top of that, who knows what's going to happen with the home buyers, the people that are under contract. There are a lot of people who are going to lose homes, and with the situation worsening as it is, it's just tough. But you're going to start creating more of these smaller companies start to eat the crap, basically, because even now on the market, I mean, I can only talk about Phoenix because that's the actual data I have. I'm not basing my data off of realtor.com or Zillow.com. I'm actually using data that I have access to give you guys news. I can share with you that, I mean, we're seeing inventory go up pretty exponentially. We're now around 16,210 as of today, and our pending numbers have shot down from 11,000 to 8,500. It's still floating around the 8,500 mark. So it looks like we are balancing out at this rate, which gives us approximately almost a 2-month list to sell ratio, which a lot of these people on YouTube are telling you the market's crashing and everything, but a 3-month ratio for like when we were healthy for the longest time, like we had 20,000 listings, and there was like maybe 8,000 to 9,000 houses selling. So we're not there yet. To me, this is good news. We're starting to slow down. We're starting to recover. I think personally that these small companies like this, yes, unfortunately, people are suffering the consequences, but people at the top who made the poor decisions to try to take advantage of the freaking monstrosity that happened over the last 2 years, they screw themselves over. And I hope that these people that are suing them, take them to court and successfully get some of the salaries back or whatever the case may be. But the people that are suffering are the people that try to take advantage of the market and try to, get that easy money by doing non-QM loans and stuff like that. So if you're a home buyer, do your best to try to avoid non-QM loans. Stick with reputable lenders that are working with federally insured loans to protect yourself from this kind of crap. And if you tell me, Javier, but I can't buy unless I use one of these lenders, well, maybe you shouldn't buy then. Explore a different area where houses aren't so expensive, so therefore your income works in a different area, or work on the things you need to work on so you can actually qualify for one of these loans. And we'll see as more mortgage companies starts falling down what happens, and we'll keep an eye on the market here for you too, here at Javier Vidana, the most trusted news of all of whatever. I'm done.